I think we're good to go. Hope everyone had a nice weekend. Let me know if you can hear me and see my screen, audio, video, all that fun stuff. And yeah, we'll get churning through all the stuff we've got to talk about. Yo, hello, nice. I also hope you've been keeping up to date with the Technical Roundup podcast interview series, whatever. We most recently spoke to FTX's Sam about some interesting stuff, so that episode is everywhere. hope you get a chance to listen to that. Welcome back from your COVID break, Fantasy Cricket Freak. Yeah, the thing about the podcast is, like, we do some preparation before we do them, obviously. And so part of the preparation, understandably, is listening to other episodes that guest has done, or other bits of writing, tweets, whatever, just finding interesting things, and then trying to either get them to expand on them if they're genuinely interesting, or get other content if it's something they've discussed before. And no joke, with the preparation for the Sam podcast, I think I listened to like 3 podcasts, I think. The Duck listened to like 2 or 3 as well. And I think every single one of them talked about that arbitrage trade. Like how he got into crypto with the first big arbitrage trade. Like every single one. It's like, that's insane. Can you imagine the poor guy? He was doing like, I don't know, 3 to 4 in a week and having to give like a 20-minute segment on on that big it must have been so frustrating. I mean, listening to it was frustrating, right? The same story over and over again, every single podcast, several podcasts in the same week. Fucking hell, people, do something original. Anyway, that's kind of what we went for. Okay, cool. So first things first, hope you had a nice weekend. Thanks for coming to hang out on Monday. Second thing, a thank you to the show's sponsor, which is Blockfolio, the portfolio tracking and mobile trading app. Go to blockfolio.com to download it and check it out. And make sure to like the video if you haven't already, or do that later. That's fine as well. I won't get offended. Happy Easter to everyone as well, of course. And yeah, so what I want to do, I've actually got a fair bit of content for the news or just general discussion thing. So what I'll actually do is start with the TA side of things, do that briefly, then do the news in like, give it the detailed treatment that I want to give it, and then we'll revert back to the TA side of things and see if more detail is required on that front. So on the Bitcoin side of things, it looks good. We're back above the range high. So the weekly close was okay. I mean, it was good enough, right? Specifically, it didn't sell off from this prior level of resistance at 58s, and it's currently finding support there at the start of the week. So that's kind of what we want to see. I mean, yeah, local resistance here, whatever. But for me, the big level was this weekly breakout, and that's currently acting as support. So as long as no weekly closes back below it, and the weekly holds that, or that holds as support during the course of the week, I think that's fine to go towards all-time high and beyond. So that's kind of the weekly analysis. The daily makes that case reasonably clear as well, back above this prior range high. Right, we had the range high, breakout candle, whatever. We had the first attempt to get above it, which wasn't successful, and now we're above it again. And generally speaking, as you know from previous videos, if you get a fake out once, which sells off, if the market then reclaims the level again, the chances of the second reclaim also being a fake out are just pretty damn low, for the most part. A single fake out, yes, that's a very reliable pattern. Double fake out, much less frequent. And yeah, so generally speaking, whenever price makes its way above the fake out resistance, so to speak. So this is the failed breakout, sold off. If it gets back above there again, I expect that to act as support the second time round. Okay, so we know from the weekly that no weekly closes below 57.5. On the daily time frame, we can take like some liberties and basically say no daily closes below this range high, so below 56. As long as this area, the last swing high, acts as support and no daily closes below it, I think continuation towards all-time high and beyond is likely. Losing this area would suck. I mean, the chart would just look super choppy, and we'd have to see where we trade back within this range and below the range high. That would just be a pretty unpleasant scenario to deal with overall. I feel like we've ranged for a fair bit, and volatility has been quite low generally on Bitcoin. So this should, getting back above this level should really be enough. Just be aware that if it isn't and we close below here, we're in for more chop, downside, whatever. So yeah, that's kind of my view. 56 to 57.5. Expecting it to hold towards all-time high. If it doesn't, chop and maybe come and test this range midpoint level again, and God knows, maybe even the range low. But my focus again is on holding this prior range high as support. That's pretty much it on the Bitcoin side of things. ETH looks better than Bitcoin in terms of its structure right now. So we had, in a similar fashion, a long, well, in crypto terms, a long consolidation, and now the market's broken above it. We're here. So we can use a similar logic, saying, you know, we're above support. As long as that holds, as in we don't trade back below it, that's bullish, and expecting continuation into new highs, etc., etc. What you don't want to see, as with any range breakout, break from balance, whatever, for the most part, is price to lose its breakout level, so to trade back below where it came from, which is kind of the 1,900, 2K level. That would suck. And we probably have to retest some stuff if that were to be the case. For the most part, with high time frame breakouts, they should really be taken at face value. Like, if it breaks out, it should just go. If it stutters and starts to, you know, spend too much time at the pullback level, etc., the market isn't as strong as it looks, right? So bullish above the breakout level. If you get any kind of consolidation or deviation-y type of scenario, scrap it and look for some sort of higher low to form on that type of pullback. I think I always make this case that Bitcoin 20K breakout is the best example. You have a really clear level, market smashes it, and if it's as good as you think it is, it just keeps going, right? The less time, generally speaking, with high time frame or important breakouts, the less time that's spent retesting that level in the short term, the better, right? So if this is really a bullish breakout here, I don't really want to see it spending much time back where it came from, so to speak. To that note, ETH BTC, unsurprisingly, weekly resistance, traded, basically failed breakdown at the weekly market structure level, narrowly closed below it, I mean, arguably as a swing failure below that low, and then made it all the way back to the range high in one candle. Good, right? It's a good development. We want to see this area hold as support, especially given you have the breakdown attempt into the moon, right? It's kind of the opposite of what we had in Bitcoin. We had a breakout attempt, it went down. If it gets above that, that's generally bullish. You can apply the same here, just in reverse. You have a level, you have an attempt down and a move above. If it goes back below that level, then it's probably cooked. But generally speaking, this is our range for the time being. The bullish case or bullish continuation case for ETH BTC emerges on a weekly close back above this 36 level. Previous range high, a million times range high. This is the breakout leg which failed, and now we're back at the original level. So it's kind of, again, even at resistance, similar to Bitcoin, where you have big level, looks like a breakout, didn't work. So if it gets back above that same level, it's very unlikely to be a double fake out, and that would probably just full send. That's where I'm focusing on the weekly time frame. The reason for the altcoins look ridiculous index analysis title, it's not clickbait, it's based on these indices, which we have in our overview list. If we can get the video to 100 likes, that would be sick. But generally speaking, the reasoning behind the title is that a lot of these altcoin indices look like this, where we had a prolonged period of consolidation, and since the last live stream, we've now broken out from that consolidation, and it looks like impulse, consolidate, and then the trend forming stage of yet another impulse. The same breakout rules apply. Generally speaking, the less time spent retesting the upper boundary of the breakout, the better. Ideally, no time is spent retesting it and we just go up. That's great. Anything that fails back below the level, making this a failed breakout, that sucks, right? So same old breakout rules as before when it comes to even the indices. And so that's alt perp. These are kind of in, well, not exactly in order, but alt perp is kind of your highest caps, mid caps, and then shit purpose for the shit caps. And then there are sectoral ones as well. You can see mid caps kind of look the same, right? The prevailing theme appears to be a period of consolidation and then a break from that consolidation, or a break from balance, whatever you want to call it. So again, the less time that's spent retesting anything, the better. If it falls back below breakout levels, that's when we know that we might be getting scammed for a little bit. DeFi perp, again, or also I should say, I mean, all of these more or less look the same. Some look stronger than others, but we can get a decent, they act as a decent barometer for altcoin risk appetite for the most part, if indices are just breaking out. However you want to draw this, doesn't need to be perfect, right? Same here. Long range breakout attempt going on right now. You don't want any closes back below where it came from, but generally speaking, seems to be following, even DeFi seems to be following the so-called dinosaur coins, which are leading right now, but obviously struggling in relative terms. You can see by the percentages. Holy perp, ahead of the game as well. For those of you who don't know, this is like basically Sam coins, Solana, FTT, Serum, I think. I mean, you can do this at home, right? You have level resistance, and the preceding area is just this consolidation. It seems like we had an impulse, moved sideways for a while, and now are entering the another trending leg. And we talked about spending as little time as possible at the breakout. This is not a bad example of kind of what's acceptable. If it's going to wick, it should be very quick, bought up very aggressively, and then move away from that point onwards as your general green lights for things looking decent. And unsurprisingly, anything that falls back below the range high or ends up being a failed breakout, that sucks. We have to deal with more chop. Exchange perp, the same. I think this is BNB is leading in this category. Same old. Price moves sideways. You have the range high, it breaks from it and looks to be running away for the time being. Same with the shit perp and the privacy perp as well. So that's basically, in a nutshell, the reason for the title. Altcoins look ridiculous, index analysis, and it's because all of these altcoin indices have made higher highs and broken out from multi-week consolidations, and generally speaking, breakouts from multi-week consolidations are a good thing, as long as they don't fail to break out. Does that make sense? Cool. I'm glad it does. We can obviously, it really matters then what you do within, like with that information. So for example, the indices are kind of a guide, and then you might see which of the indices look strong or which sector you know best, and look for specific instruments within the categories which are performing well to have more concentrated bets. So for example, let's say you are really bullish DeFi perp, as it's just starting its breakout now. You would then, in my case, for example, have like a DeFi watch list, like DeFi blue chips, and then you would see within these instruments which ones look like they're the strongest or poised to go up the most, which look the best out of that basket. And that's kind of how you build high conviction, usually slightly narrower in scope positions. You get a broad overview of market kind of risk appetite from the indices. You then break it down by sector based on either just relative strength or strength relative to the other indices, or based on your familiarity, right? Let's say you know the Holy Perp very well, you know the Sam coins, and you follow Solana, FTT, etc. Or maybe you're like a dinosaur coin legend that's been waiting for weeks and months for your time to shine, and then you'd break it down a step further and go to your pre-made watch lists which reflect the indices and find usually something like 2 to 5 good high conviction plays that you can actually track and position accordingly. What does it mean to know them well? Either a lot of experience trading them, you're aware of catalysts that are coming up, you're aware of the fundamentals, any of that. What doesn't make sense is the amount of likes here. Smash that button. Yes, I agree. Yeah, so that's the in a nutshell version of the market. Bitcoin back above range high, as long as no closes back below, expecting all-time high plus. ETH already broke out and made its all-time high thing, as long as there's no dodgy deviation back below the breakout business, probably just keeps going higher. ETH BTC looks good at resistance, weekly close back above 36, 37 on the weekly time frame, probably gets sent, and we see a period of outperformance of ETH relative to Bitcoin, and I expect that to trickle down to altcoins as well. As for the altcoins, most of the indices look really good. Doesn't mean they can't pull back, but for the most part, I don't see... I mean, they've all made higher highs for the most part, which is really good news, especially with the added context they were consolidating for a while, so that raises the probability of this being some sort of trend-forming leg. And from there, based on your experience or what the individual charts within the indices look like, etc., you can navigate to your list and find whatever number of positions that you can actively manage and that you can have conviction in. I generally err on the more conservative side. I'm not really good at managing more than maybe, I don't know, 3 positions at one time. I've got a pretty low appetite for that, whereas some people can just have like a full list of like 10 plus and do that. I'm not one of them. That's why I'm being slightly vague as to the final step, because it really depends on how you trade, what you've traded before, and where your comfort zone is. So yeah, that's kind of the quick market view side of things. There is some really interesting news stuff that I want to discuss to give some context to the market, see what's up, and then we can revisit specific charts, people asking ADA, etc. We can revisit specific charts shortly after. So in the discuss section, why don't we start here? I'm sure you've seen this. Grayscale's intentions for a Bitcoin ETF. We're 100% committed to converting GBTC into an ETF. And that should come as no surprise for those who listened to our conversation with Max Bornen in the Technical Roundup podcast. The interesting thing about this piece of news is, well, there are a couple things. The first is that I generally agree with the argument that GBTC isn't going to stay competitive if it stays in its current form for a particularly long time. I think there's a 50,000 minimum investment, if I'm correct. If you're buying at NAV, that could be wrong, but I think there's some sort of minimum threshold. But also, more importantly, there is a 2% fee in those cases as well. We've also seen more recently that it can trade at a significant discount to actual Bitcoin, and that's had implication in the lending market. We saw BlockFi pull down their rates, and I would speculate that those two things are related. Grayscale tried to kind of make up, bring in the discount, have it trade, well, basically eliminate it to some extent, or pull it in. And the way they did that, I think they announced 200 million of share buybacks, which helped a little bit, but it doesn't fix the problem. And so now, obviously, the easy fix, or I suppose the most effective thing, would be to convert GBTC into an ETF. Interestingly enough, this doesn't mention anything in terms of specific developments. It's kind of just announcing their intentions. We are confident in our current positioning and engagement with the SEC. Like, it doesn't really mean anything. In my opinion, there's no substantive comments or commitments made for this announcement. And we've also seen ETFs in other jurisdictions do really well, right? Like the Canadian ETF, which came about, I think, a month or so ago, is doing serious numbers, and Canada generally is way better in terms of these structured products. And also, we know that the track record for Bitcoin ETFs in the United States is really bad, but I do think if there's any year where we're going to have a Bitcoin ETF approved by the SEC, it's probably going to be this year. And obviously, because of the amount of AUM that Grayscale has, they're probably one of the better candidates for that role. And as you can see, they said somewhere here that you wouldn't really need to do anything to... Hold on. Yeah, here we go. When GBTC converts to an ETF, shareholders of publicly traded GBTC shares will not need to take action, and the management fee will be reduced accordingly. So this is kind of good, positions them favorably, but also unsurprising, right? Because they need to make their product more competitive. Like if you're holding GBTC and it's been at a significant discount to Bitcoin, that materially affects your actual performance, P&L, etc., etc. So it shouldn't be. It's funny how much it has swung, right? If we had this conversation a few months ago, we would be all the way here saying, "Oh, it trades at such a massive premium. You're an idiot if you don't do the arbitrage trade. You know, if you're a big fund, etc., etc." You know, like world of opportunity given the whatever 12, 15, 20% premium that GBTC was trading at, and now to be here saying, "Oh my God, we need to do something to patch the discount that GBTC is trading at," and then all this talk about ETF and other products, share buybacks, etc., etc. It's just a bit of an interesting transition going from A to B, but I think this is part of a larger trend of having more sophisticated and functional products for institutional investors in the crypto space. Again, Canada seems to be particularly taking the lead on the ETF side of things. GBTC is well positioned within the US to take that role. Good. Good. So that's the GBTC thing there. Another very interesting development, those of you in 2017 remember this, the kimchi premium, it's back, and it's currently 16% and widening, well, as of 11 hours ago, right? So this is Bitcoin against the South Korean won. You can see that it's trading at a premium, so Bitcoin against South Korean won, trading much higher than Bitcoin against the dollar, right? And that's where the kind of kimchi premium term comes from. You can see Larry was having a conversation with Joe Weisenthal here, and Larry's explanation is that retailers buying a shit ton again, and there isn't enough to be sold, so prices go up, right? So that's causing the price discrepancy. And as Larry correctly points out, normally that would be arbitraged away, because, you know, crypto is not 100% efficient, but it's slightly better than 16% differences in Bitcoin pricing. But again, relatively low amount, since it's a relatively low amount, but SK, so the South Korean exchange system, is notoriously sealed off, and they have somewhat strict capital control. And when you have strict capital controls, it becomes much more difficult for, well, in this case, well, in some cases, Western speculators to arb this price difference, right? So that sort of explains where that comes from. There's another bit of contextual info that goes quite well with this, and it's the following. You'll remember, and you all know CryptoQuant. So this is just some context to the Korean situation right now. We know it's trading at a premium. So he's saying, remember when the Bitcoin market collapsed to the 50% kimchi premium back in 2018? His argument here is that it's not as worrisome, the fact that the premium is there, because the overall market share of the Korean market is significantly lower now than it was in 2018, right? So his argument, or his data, suggests that the Korean market had 7.9% of the influence as of 2018 January. I'm not sure what the influence means. Maybe it just means like trading volume. While today it's only 1.7%, so a fraction. Nevertheless, right, if we take an extra bit of, like another final bit of context here, to do with the Korean picture, he tweeted this before the premium tweet, I think. It says, shitcoin prices are skyrocketing and Korean crypto trading volume has surpassed the national stock exchange. Now that to me is mental, right? So not only is crypto trading volume greater than what seems to be their domestic equities market, but also, as we know, the Bitcoin flow on the way, during this rally has very much been east to west. And a lot of the Eastern appetite for crypto is shitcoin predicated. So I totally understand the argument that, hey, look, yes, there is a premium, but it's because it can't be arbed away. Plus, In relative terms, Korea plays a much smaller part than it did previously, so it doesn't matter, etc., etc. But just as a bit of like, where are we now in the market type of thing, the reason for the premium and the extra context around it is that retail FOMO is just absolutely blown up in Korea, right? And that generally doesn't happen. Like when retail just starts getting balls deep, typically, or in the overwhelming majority of cases, that doesn't really happen in early stage bull market, so to speak. It's not like a top signal. I don't believe in top signals. I think they're particularly helpful, especially on a run like this. But there's a reason that retail participants, especially first-time retail participants, don't generally have the best timing or win in markets. So when you see these sorts of data points of retail starting to go apeshit for shitcoins, for crypto, etc., etc., it's just some context that's worth being aware of. Like I saw some really bad interpretations that, oh, well, there's a big kimchi premium and that means that the market's topped. I don't think it's as simple as that. I just think it's important to gain information from it as to how retail is behaving, and this is evidence to some extent of retail itching with FOMO, at least on the Korean side of things. Again, 2021 is super weird because in 2017 it was just pretty much a retail bubble. In 2021, it's like institutions are front-running retail, like on the way up. And now we're starting to see evidence, at least internationally, of retail getting involved as well. So just some stuff to be aware of. At the very least, it doesn't, to me personally, scream early bull market type of stuff. Maybe I'm biased, but yeah, those are my recollections in 2017 at the very least. So if you think the Bitcoin premium is big, right, 16% on Bitcoin, if this is correct, which I think it is, I expect to see the shitcoin premiums to be pretty crazy relative to the dollar. So we'll see how all of that pans out. Just some quick, data, context, whatever to go with all of that. This is a very interesting one. Vic Sharma says Walmart is stacking Bitcoin. You heard it here first, on or around May 18th, 2021, which is like in a week and a half or something. Well, basically 2 weeks. Quarterly earnings report. Now, I tried to look for a source for this. There doesn't seem to be one, which doesn't necessarily mean it's fake. I just can't find a source for it. A couple of his colleagues, I think Fluffy Pony was one to say, yes, this person's very knowledgeable, I trust him, etc., etc. But I personally wasn't able to find a source for this. If it's true, that's obviously quite big. They wouldn't be buying in small size. Maybe some of the Bitcoin coming off exchanges during the course of this consolidation generally has been related to this. God knows where they were buying. You said May, April. Oh, I see. My mistake. On or around May 18th, 2021. Yeah, it's not in like a couple of weeks. It's in over a month. Either way, if this is true, it'll be quite big. The biggest corporate purchases, or at least the biggest name ones, like we had Sailor just lead the way, right? MicroStrategy, that's pretty well known. Tesla was like the big one, but wasn't like Elon does whatever Elon wants, right? Like if there's ever going to be a company that's that was going to make that big sort of play, it would be Tesla. But a lot of people see Tesla itself as like a very speculative rogue company of sorts, so they weren't totally surprised by the Bitcoin purchase as well. Whereas obviously Walmart would be slightly more blue chippy, a bit more serious, and maybe attract or come up on the radar of a different type of investor. Like it's really easy if you're a Tesla skeptic to write off Tesla buying Bitcoin and just have it all part of this one whatever Ponzi family and not take it seriously. Whereas a name like Walmart, much harder to brush off as just a speculative fervor. In my opinion. Again, don't know if it's true, haven't seen a source. If it is the case, great. I guess we'll find out in the quarterly earnings report in a month and a bit. Just something off to have on your radar as well. One thing I'll say is it's really easy to get caught up in confirmation bias. Like you watch Coinbase and see these massive chunks of Bitcoin being taken off the exchange, and then you see these rumblings or bits of news, and in your mind, the outflows of Coinbase could only be big millionaire, billionaire, corporate, whatever chads buying. And very often it is the case, right? But that's not necessarily something that's verifiable. Like, those flows could be absolutely anything, right? Now, yes, there has obviously been a strong correlation between supply of Bitcoin on those exchanges and the price, so it's very easy to and pretty reasonable on its face to subscribe to that. But in your head, at the very least, I caught myself in a couple times thinking, oh, look, Coinbase, big outflows from Coinbase, all these big chads are buying. But then, if you take a step back and think, do I have good evidence to believe that that's, sorry, is that the only explanation for these flows out of Coinbase? And the answer is obviously fucking not. But we're just conditioned to believe that any flows out of Coinbase are big chads buying. It's likely, but, just you got to keep yourself slightly on your toes with these things. So yeah, if Walmart's buying Bitcoin, great. I guess we'll find out. I didn't find a source, but I don't think it's a particularly far-fetched conclusion to arrive at. Mutual fund. We were just talking earlier about GBTC in its current non-ETF form not being hugely competitive as a product, at least in the emerging infrastructure in Canada, no less. And so this hit the wires earlier. CI Global Asset Management launches North America's first Bitcoin mutual fund. Carries industry low management fee of 0.4%, right? And that's in contrast with Grayscale's 2%. And I had a look to see what it means for, to be a specific Bitcoin mutual fund. What you'll see sometimes is these, and we'll talk about them in a second, these sort of crypto products or Bitcoin products are marketed as Bitcoin products, but a lot of the time they just involve a lot of shitcoins, and it just ends up being pretty ugly, all things considered. Whereas in this case, it's actually pretty sound. So the fund's investment objective is to provide investors exposure to Bitcoin through an institutional, quality fund platform. Sure, it invests all or substantially all of its assets in the CI Galaxy Bitcoin ETF, which trades on the Toronto Stock Exchange, etc., etc. And I went and took a look. So this is the CI Galaxy Bitcoin. And pretty simple, direct. The funds only invest in Bitcoin. No shitcoins attached. I think Galaxy has got other funds which are slightly more diversified, have more stuff in them. But this very much seems to be a case of does what it says on the tin, which is great. And again, very interesting to see the trends within North America as to where is the institutional volume going, or at the very least, which products, in which jurisdictions are the best products being built to handle this type of investor. And it generally seems like Canada is ahead of the game. ETF here, Bitcoin mutual fund. The SEC has some catching up to do, I think, in North America. As I mentioned, GBTC or Grayscale is probably a shoe-in to be the first ETF, but that's a process in itself. But yeah, general trend, right? More competitive products, institutional ways, if you will, to get exposure to the market. No one wants to deal with hundreds, custodying tens, hundreds of millions of Bitcoin. So we need products like these, which are competitive, in order to keep things rolling in the direction that they have been with all this professional participation. What else was I going to mention? So this the last three are going to be slightly more lighthearted in terms of the new stuff. So this is the kind of shit that really pisses me off. Not in like a, it doesn't really piss me off. It's just typical, right? So I mentioned earlier, and what you'll see a lot is, I'm sure you've had friends come to you and say, well, how do I get exposure to crypto? And I've had friends, mostly in 2017 and 2018, say, well, I want to invest in crypto, so I'm just going to go on CoinMarketCap and buy the top 10 and just split my portfolio into 10% each of the top 10 of CoinMarketCap and kind of see what happens, right? And I generally wouldn't recommend that to anyone. I think it's a shitty trade, or a shitty way to structure one's portfolio. If anyone cares, if a good friend were to come to me and say, I want really passive crypto exposure with a reasonably safe, or at least low risk basket, I see nothing wrong with like a 70-30, 80-20 Bitcoin ETH, and that's it. Or if you want to be a bit more adventurous, have Bitcoin and ETH be like 60 to 80% of it. I mean, 60 is a bit low. Maybe 70 to 80%. Well, 60, 80%, whatever, doesn't really matter too much. And the remainder to have some high cap, somewhat prospective shitcoins. So maybe some ETH competitors, and then exchange coins, I think, generally aren't terrible either, assuming the Coinbase IPO isn't a total flop. But what I don't think is reasonable is this sorts of shit, right? The JP Morgan basket of companies with exposure to cryptocurrency. Like, if you want exposure to Bitcoin, buy Bitcoin. If you want exposure to ETH, buy ETH. If you want like crypto exposure and you don't want to do the research or do anything like that, there are very many funds and indices. I mean, Galaxy being one example, and also a ton of funds in the space with track records, which will, I'm sure, happily take your money if you're wealthy enough and attempt to beat the market for you. Stuff like this is very much at the bottom of the list, and by this I mean look at this crypto index, right? 20% MicroStrategy. So again, it's not a coin, it's not a crypto company per se. I mean, arguably it's like some sort of crypto hedge fund, whatever, but like it's not really crypto, right? And then what? Square. So this is, Jack's crypto payments Bitcoin thing, and that's it. That's like, 38% of the basket. You've got two just US listed companies, one which just buys Bitcoin with any amount of money found in the back of the sofa, and then you've got Square, which also does non-crypto payments as well. Riot Blockchain, and then this is just when it gets completely off the road. You have Nvidia Corporation, right? PayPal, AMD. I mean, look, this is just Overstock, and then I think Silvergate is that the bank? Look, this is I think generally speaking, these are the types of products to avoid. Like, if you're gonna get into crypto, get into crypto. This just seems like boomer cope, where you kind of understand that crypto stuff is going up, but you're too much of a pussy to exit your comfort zone and actually invest in crypto or crypto companies or crypto indices and crypto funds. So you lie to yourself and create this best of both worlds mirage where, oh yeah, I've got exposure to crypto, yeah. Meanwhile, you're just buying US listed shitcoin equities. Like, that's my view at the very least. Like, if you're gonna take the plunge properly. Avoid boomer cope when these banks try to upsell you these sophisticated basket structured products. Fuck that. Pull your finger out, make an effort, in my opinion at least. Now, on the meme side of things, first of all, this isn't it's not an endorsement, right? This is probably, I don't know anything about, I don't know, okay, I know some things about this. Long story short, I've been buying emojis in the last couple days. It's supposed to be like a digital identity, and then you can use it for payments, and then, all sorts of cool stuff. But let me be clear, I've just been buying emojis because it's fun. That's it. That's all I know. I'm not endorsing the platform. It could all go to zero. It's super centralized in its current form. There are no crypto payments, etc., etc. But being completely frank with the chat, I wanted some degree of experience with digital collectibles, NFT, Web3, all that type of bullshit. I really don't like being what my dad likes to call a boxer teoretic, which is someone who's like a theory boxer. You know those pricks who just sit in the back, like sit on their reclining armchairs when there's a big boxing match going on, and they're like, oh yeah, I would have dodged that, he should have punched, should have hit him there, and he had him on the ropes, and just a couple of jabs would have gotten the job done, like that sort of speculative theoretical bullshit. I like to get my hands dirty. And so I missed out on a lot of the early NFT type of stuff, so Loomdart finally shilled me that, hey, he's buying emojis on the internet. So what did I do? I went and bought emojis on the internet, and I had a lot of fun. I don't know what the fuck they're going to do, if they're worth anything. There's no secondary market. It's super centralized. I don't know shit, but I've been buying emojis and I had a good time. That's pretty much the most I can say about that. If you go on the website right now, you can see that they're like in the alpha version. So in order to get access, you need to either give your email and join the waitlist, or you need to have a code. So what I'm going to do now is dump my codes in the chat for you to use if anyone wants to sign up. And oh, rip. Okay, I guess you're not getting any fucking codes because Pastebin deleted them. Yeah, you can bypass it if you go join the Discord and introduce yourself, whatever. But long story short, this is kind of, if you're worried about a market, kind of NFT bear market, this is probably the best signal you're going to get that cryptocurrency cred, have been fucking buying emojis for hundreds and thousands of dollars. That's kind of where my life is at. So yeah, those are yats. And then on the really kind of bottom barrel sort of thing, like, let me know if I'm losing my mind, okay? But one of my good friends is actually helping with the sort of marketing, brand alignment, advertising stuff with this. And these are kind of collectibles on the Polkadot blockchain, right? I think it was an IDO, and they're basically collectible cards on Polkadot. Now, it's fucking called Pokemon. It's called Pokemon. What do you think is going to happen when the license holder of Pokemon, which is I think Nintendo, if they as much as fucking sneeze at the founder or the CEO, CMO, whatever of this project, it's just going to get fucking nuked. It's not sufficiently decentralized. You can always exert pressure on the key stakeholders, executives, etc. So, like, the concept is cool, but for fuck's sake, it's called Pokemon. I feel like I'm losing my fucking mind. You just can't do that. This is the most blatant copyright infringement or intellectual property infringement that I've seen in a long time. But it's so blatant that it's absolutely hilarious. I just find it so funny. It's actually called Pokemon, and I'm sure they raised like millions of dollars or whatever on that IDO, and it's fucking called Pokemon. That's insane. But also hilarious. Again, not endorsing. I don't own any of these. Whatever. The only NFTs I've punted are yats. But I think it raises a general, a kind of broader point with NFTs, is that a lot of the time the governing law or the governing law of all the IP rights just really, really isn't clear. And there's a good chance that if you think you own an NFT, at least in the eyes of property law, in whatever jurisdiction you're in or whatever applicable laws there are, you probably have very, very limited rights over the NFT itself unless it's original. So, A, your rights aren't very clear, I'm sure, for a lot of these platforms and the NFTs that you do own. But B, some of them are just really, really blatant infringements of intellectual property of really well-funded, rich companies like Nintendo. So just bull market things. I personally just shared this with you because I found it hilarious. It's actually fucking called it's fucking called Pokemon. And if Nintendo decides to sneeze, then I think we'll see this project rebrand pretty quickly. Kawaii says Nintendo who do not allow gameplay of their games on YouTube or Twitch. Yeah. So that's my news roundup for the most part. I think I've covered it all. If we can get to 200 likes on this video, it won't change my life at all. But I guess it's important to have goals in life or something. So that would be cool. And yeah, let me know if you have any feedback, questions. I hope these things are still useful, covering the interesting things or developments in the crypto space. I certainly enjoy them. Lets me use my brain a little bit versus just going through the charts. So yeah, that was fun. Have you looked into Zed and their horses? No, I haven't. Oh yeah, some of my yats. Yeah, I'll show you some of my yats. Why not? Again, not endorsing, blah, blah, blah. I'm just an idiot who decided to buy emojis with a credit card. So this is the one I bought off Loomdart. the academic hat times 5 feels good, man. So that's a good one. I've got the free chart education thing, which is supposed to be kind of clever, but obviously isn't. I've got Posh Man Top Hat versus Duck. God knows why. I bought this one for the Duck, but it's pretty shit. It's supposed to be like for his videos, like Duck Chart movie thing, but it's pretty awful. It gets pretty embarrassing towards the end. I've actually got a simp stack. So this is for my... Oh yeah, this is the COVID vaccine one. You know, you've got the mask, you've got the sweat, you get the vaccine, and you turn into a robot as Bill Gates takes over your body. Now, if you want to see how down bad I am, I've got a bunch of simp ones. So as you can see here, this is an aubergine or an eggplant, which is intended to depict a penis. There are these red lips which follow, and the chronology of eggplant and red lips is supposed to convey the idea of oral sex, and that is solidified by this semi-flirtatious devil emoji which follows the eggplant and the red lipstick. And there are others, once again featuring the aubergine, very important, this time the peach, which is the rear side of the female form, followed by the eyes emoji depicting an interest in the ongoing relationship between the aubergine and the peach. You can see that theme continue with the aubergine peach and that same flirtatious devil emoji, which is implicit of some sort of inappropriate or explicit behavior between the eggplant and the peach. And you can see the theme continues with the eggplant and the lips, but this time it is not the flirtatious devil, but actually the droplets of water, which I will leave to your imagination to infer what the droplets of water are depicting. But yeah, it gets pretty bad. You got the finger. You know what? I'm just gonna stop. Let's pretend this never happened. Yeah. Listen, I'm not proud of myself. Don't get it wrong, or don't get it twisted, so to speak. It's okay. We'll do a separate yacht stream. Terrible, 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 terrible. Some of the shitcoins that we talked about in Technical Roundup last week have aged really nicely, which of course also means I didn't buy any of them because I am intellectually deficient. But that's okay. That's not new. Filecoin was one of them. I think the first shill. Well, it wasn't a shill. It was like a TA-based argument, whatever. It was when you had the market structure break at this juncture at around 44, 46, whatever, basically within here, and then number go up all the way to here. That's great. I'm not really sure how we'll update this. Generally speaking, with trends that pick up like this, especially in the bull markets, the way Donald likes to approach it, and this is something I generally share, is that you manage the position based on the consolidations which form on the legs up, right? So this would be one. This would be one. Up here, it needs to be slightly clearer. But the basic idea is you hold your position until you get a shift in behavior, and that shift in behavior primarily taking the form of one of these consolidations or pre-breakout ranges failing to do its job or just breaking. We wrote about it pretty well in Technical Roundup in terms of articulating the context, but basically the immediate objection, like if I were to tell you, okay, your idea, if you're long this, your idea is invalidated below here on like a high time frame swing, a lot of people will basically protest that idea, because if you just measure how much of a haircut you're taking from where the market is to where you'll likely be invalidated, that tends to be like a 30, anywhere from 20 to 40% pullback, or kind of giving 20 to 40% back to the market before you're finally invalidated, right? And again, this tends to be more of a trade management tool more than the trade entry tool. Ideally, you're already kind of in from, let's say the technical roundup area, and you're not just entering in the middle of nowhere. So there's an immediate objection which comes to mind, which essentially argues that, well, why would I wait? Why do I have to wait 20 to 40% to get an exit? I'm giving like half my gains back to the market. Isn't that mental? And the answer is no, right? Because if you measure even the, whatever, let's say 45 to where it is now, you're up like 300%, right? So again, in those relative terms, is 30, like, does it sound awful to give back 30%? Yes. Does it sound slightly less awful or more reasonable in the context if you know that you're up to 300%? And for trend continuation, you're probably targeting similar magnitude moves. Like, with that surrounding context, suddenly the 30% haircut before invalidation seems pretty reasonable given how much you've come and then what you're targeting on the way up. So when it comes to, especially with strongly trending altcoins, etc., your invalidation always needs some context as to some extent where you're coming from, but also what you're targeting, right? Like, let's say you're trading a 10% range, like the whole range is 10%, right? And you're trying to capture moves within it. Like, is it reasonable to have a 10% invalidation when trading one side to the other? Probably isn't, right? If this is all you've got to capture, your invalidation, or how much room you're giving your idea, should somewhat scale to the types of moves that you're trying to capture. Like, the same goes with the precision of your entry, as I've argued before. Like, if you're trading a really narrow range with, say, 500 points available, or let's say, just to get the percentages easier, let's say you've got like a 100-point range which you're trading, right? At that point, does it make a difference if you're kind of an entry which is 10 points better than another entry? At that point, it does in percentage terms, right? Because you've got less to capture, so you need to be more precise within those boundaries. But let's say you're swing trading, and you've got like a massive level here, a massive level there, and then you're fighting for 10 points within one side of the range, given you're targeting the other. It doesn't make any sense at all, right? So how much space you give to your invalidation and the precision of your entry, they always need to be contextualized by what am I trying to do, how much am I trying to capture. If you're trying to capture more, or there's more on the table for you to trade, then the requirements for your precision are lower. At the same time, if you're dealing with more narrow confines, lower time frames, shorter trading ranges, etc., then the requirement for precision goes up. Now, obviously, the two ways to cock it up is when you have a big swing idea, trying to be too precise and managing yourself out of the trade before it finally gives you the move. That's one extreme. And the other extreme is obviously when you have not much room to work with and you get way too sloppy and don't give yourself a way out, or just get shitty entries at the same time. Like, not all trades are made equal in that regard. So yeah, that's Filecoin. I think we talked about something else, but I've completely forgotten what it is. Oh yeah, Uni. I want to talk about Uni. So this sell-off was Uni v3, the announcement of the new version and the changes that came with it. That's understandable as a kind of sell the news event. The market's been pretty decent on the bounce back from that point onwards. I think generally speaking, it's at resistance now, but as we argued in Technical Roundup, I think if you get a daily close through this prior level of support, I mean, you could even, I think what we did in TR is we took the liberty and just pretty much drew out this whole consolidation. But you can see there's like a lot of congestion in this area, right? You've got prior lows, you've got the kind of the breakdown point of the sell the news event, you've got psychological resistance around $30, right? Big round number. Generally speaking, Buying this from the underside seems like not a great idea because you're buying resistance. But I think anything that goes clear of this area and just breaks all these wicks, a nice meaty full-bodied candle, at that point, to me, the highs look vulnerable, and you probably get an extension into 35, 40 if I had to come up with numbers. And that's really the benefit of trading a lot of these DeFi pairs, that a lot of them basically consolidated, broke down, and are now coming back to where they broke down from, right? And if you manage to break or reclaim that structure, then you have some sort of high left as resistance, but it's not really resistance. You're really targeting a much larger move and new all-time highs. So there's a certain asymmetry baked into trading close to prior all-time highs, and that asymmetry is you generally don't expect the all-time high to act as resistance, which means that you can be a bit more patient in waiting for areas of resistance to get cleared without compromising your risk reward, if that makes sense. So yes, let's say if this is the trade, right? Like in a world where this isn't the all-time high and you actually have resistance, like strong resistance here, and then your level for a trade, let's say, is above this, and then your invalidation is, God knows, let's take a wide, whatever, just for the sake of illustration, this swing low here. In terms of risk reward, if my argument is, oh, you close above here, we go up. Let's say the market closes at this point. If you consider the all-time high as resistance, then the trade doesn't look too great. Like this ends up being your entry. Even if you move up your invalidation, this ends up being your stop loss. But then this green line ends up being your target. And you can see that the risk to reward of the trade ends up being quite shitty. So it's not really actionable even if you reclaim resistance. However, given in this context and many of these DeFi specific contexts, the only trouble area that's above these reclaim levels is the all-time high. It doesn't really count as resistance in most cases, or at least there's a very high likelihood that it just extends through the all-time high and you don't get much of a fight there. And in that case, the risk-reward kind of profile of the trade changes. So that same level here, let's say you get a close above and you get an entry, whatever, through the high, right? So this ends up being your entry. Your stop, whatever, either here or here, just theoretically doesn't really matter. But at that point, your target isn't limited to the prior range high, but you're actually looking through an extension through it into whatever, 40, for example. So suddenly the risk reward ends up being way better based on the assumption that the all-time high isn't a strong level of resistance to de-risk into. So that's kind of the benefit of trading these sorts of structures, is that there isn't much stickiness above the market in many cases. Does that make sense? ADA. Sure. It's not really doing much against Bitcoin. And again, when alt USD pairs are going up a lot, at least from like an investment or portfolio rebalancing point of view, it's worth considering whether it's going to outperform Bitcoin, which I assume most people hold, or at least ETH, if that's how your portfolio is oriented. But yeah, against Bitcoin, not much. I assume there's like some dildo on this. Not really. I mean, yeah, this is just choppy. It's just moving sideways. I don't have a view on AD. I'm surprised it was spammed. It's not really doing anything, right? It's moving sideways. XRP is moving. Yeah, weekly has got a bit of space before it reaches this kind of sticky area. On the USD pair. Ooh, I mean, yeah, that's a breakout, right? That's a breakout. Yeah, I think generally speaking, as long as there are just like the same breakout rules that we've spoken about previously, as long as there are no closes back below where it broke out from, it's probably going to go to the next target, which in this case is $1 as your psychological level, if you will. I probably don't have a setup to chase it right here, right? If it wants to offer some sort of pullback, either into the level very quickly or into this consolidation at around 70 cents, I think that's reasonable in terms of structure. But your first level of resistance is, I think, approaching in the form of, well, not approach, still like 20% away or whatever. But there's, I think, $1 is resistance, 60s is your closest support, maybe 70s for a wick. But yeah, generally speaking, against BTC, still a bit of room to go before it reaches resistance. Against USD, no closes back below the breakout level at 60 cents. Probably has legs. Just historically speaking, buying XRP breakouts isn't like the best strategy. Like, you either ride the pump or you have to kind of trade the range. This is an example that comes to mind, this kind of level at 30 cents. Really clear resistance on the multiple touch basis. You get the big breakout, even as soon as it closes above it, you get a couple of weeks of upside, and then it's not the kind of retest that you wanted to be back on board with during the course of a pullback, right? You can see a lot of these, and this is that 30-cent example, these big levels, you get the move through, and then on the way down, doesn't tend to be much of a bid buying the retest. So that's kind of the only other reason to be cautious there. I just, from experience, trading bullish continuation on XRP tends to be a pretty tricky trade, all things considered. Nice moves by TRX. Yeah, I mean, those highs and lows, still some room left until resistance is reached on the Bitcoin pair. As for the USD pair, I probably need a bit more price history. Binance? It's not a USD all-time high, is it? Am I in disbelief? No, it's close. It's close. Like, honestly, I look at these charts, and I know they're up a lot, and I also know my trading system, which is very unlikely, unless it's a low time frame pattern, to let me on board this sort of move. Like, in most cases, I'm either positioned for it and riding it, or I have to wait for something to happen. This just isn't the best channel for, like, aggressive trend continuation types of setups. I think if you want to play it, the low time frame is probably your best bet. That's kind of as far as my comfort level goes. So you have ranges formed between impulsive moves, and those are probably the nearest structures you're gonna, or where it makes sense to at least bet on pullbacks if you're bullish towards a higher time frame target. So in this case, it would just be this pre-breakout range at 31s to 36s. But again, I'm just here drawing like an hourly box based on a couple of days that looks like this. If you ask me where daily support is, it's probably here, which is a nice kind of 30 to 40% altcoin pullback away. So I'm not geared, my system doesn't really excel when it comes to these sorts of things. But if you're in already, I mean, there isn't really much that's particularly scary in terms of levels of resistance. BNB is a good example of stuff that we can do. We wrote about in Technical Roundup as well. I think it was literally this level here. Yep. And we wrote about it here. One of these candles. And this is a classic, what I usually mean by failed breakout or failed breakdown type of scenarios, which define your risk for you, right? So you have a really big monthly, weekly level, whatever. Market attempts to break back below it, even with a very scary looking candle, but then gets reclaimed, right? And then that sets your invalidation. That you've had an attempt to close below it, it got bought back up, it really shouldn't be going back below there. And so at this point, just new highs on BNB look really reasonable. I don't think there's anything special. Yeah, as you'd expect, USD pair, all-time high as well. The closest level of support and what you want to hold on any sort of pullback is probably more or less the breakout level at 320-ish. Back below there sucks. I don't think it's particularly likely at this time. Go ask Trader Main about Litecoin. That's his cup of tea. Yeah, a lot of charts are going to be looking like this, right? And it takes us back to our original point that a lot of the altcoin indices look good. So then it's a matter of making a decision as to which of these sectors you have the most comfort, experience with, access to in terms of liquid trading instruments, etc. And then breaking it down one level further and finding within those sectors the pairs which look technically primed, offer the best risk reward, maybe have a fundamental catalyst, bit of news coming up, etc., etc. For my personal view is instead of having like just a super long list of shitcoins, hoping enough of them pump, there's like an opportunity cost attached to that, and you correspondingly have to size down on each position as well if you want a reasonable degree of risk. So I'd rather go down the route of which sector do I know well? Okay, let's take the DeFi example, right? DeFi perp, that's breaking out. Then I'll go to DeFi blue chips. Let's take it just again, for examples purposes, Uni as one which I know well and have been following. And then essentially saying the bullish case for this is triggered on the daily close above this resistance and target, you know, $40. And that will be like one of maybe 3 to 5 positions that I'd look to put on to ride any kind of altcoin trend forming move. So I would rather work it that way. So kind of go just kind of market wide and then alt index, then sector within the index, and then specific coins, resulting in, for me, generally anywhere from like 2 to 4 realistically positions. And I'd rather allocate my risk with like higher conviction, bigger sizes between 2 and 4 positions, rather than say, okay, all of the altcoins look good, so I'm going to buy like 5 from every sector and pray they all pump. That sucks. If you're wrong on your thesis, it becomes much harder to exit or manage your positions if you have more of them. It's just not how I prefer doing business. This is something which would be much more my cup of tea. And again, we could just do chart requests all day, but they'll more or less look the same in a lot of these cases. Likely outperforming relative to Bitcoin, USD pair like breaking out new highs or very close to being so. So that in itself isn't really enough if you want if you want to focus your bets, right? It's just like we did one of those altcoin breakdowns and most of the charts look the same, right? Like new USD all-time highs and then unclear against Bitcoin. So that could be good enough to trade, but I'd rather narrow it down. And this is more or less how I narrow it down. Does that make sense? When you get to specific points, how big is that basket? 2 to 5, 2 to 4, 2 to 5 positions, for me personally. Okay, any final questions, comments, concerns? Maybe concerns about my yachts? So you go from bigger picture to smaller time frame to select coins. Yeah, more or less. And one thing, again, always worth bearing in mind with the altcoins, don't lose sight of the big boys. If Bitcoin decides to make a punt run towards its all-time high, there's a good chance that at least in the short term, altcoins mean revert. So that's when you can maybe get a greedy or more or sort of superior entry on a lot of them rather than chasing on the way up. Do you size according to many factors or allocate positions evenly if you feel similarly about setups? It depends on the setup is the answer. So yeah, I guess according to many factors, but it's not really that many. Do you trade solely spot? When you leverage trade, how do you go about risk? I do both. Well, no, both doesn't make sense as an answer there. I do trade on leverage. I tend to stick to Bitcoin and ETH for leverage, but in this type of environment, for short-term trades, I don't mind using it for altcoins. For the most part, David, it's the same as anything else. I'll have an idea of what portfolio risk I want to allocate towards the leverage trade, and then hit it. I'm sure the Duck will do a much better job than me in terms of the specific altcoin stuff. And also the newsletter is really good for that. And, you know, Filecoin went from 45 to God knows what, like 180? How high did it go? Where's that? What am I talking about? 80. Man, I feel even worse now. Yeah, from 45, 50-ish to pretty much 250. So, you know, newsletter does catch some bangers from time to time. It's free, comes out every week. trletter.com. You know, go read it. That's all I've got for now, though. I hope this made sense. Hope it was fun. I'll keep doing the news breakdowny stuff if it's interesting and if there's an appetite for that. As always, thank you to you for hanging out and getting us to over, I think, 17k subscribers on the channel. That's pretty cool. Hope everyone had a nice weekend. A shout out, of course, to the show's sponsor, which is Blockfolio, blockfolio.com, for your mobile trading needs and portfolio tracking requirements as well. That's all from me. Newsletter tomorrow if you want to hear more. Duck on Wednesday. And then we have another podcast episode on Friday for your enjoyment. Take care, trade safely, and I'll see you next week. Bye-bye.